With guys like Michael Dell from Dell Technology forcing his employees to come back to work full time, and the US government dictating that their employees are going to have to come back to the office. What does that mean for work from home? Tune in. We're going to discuss everything you do and don't want to know about work from home and the technologies that are being created to make it easier, more impactful, and better for your business. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and a very special guest. This dude came all the way to Orlando, Florida to participate in MortgageCon 2025. He hails from New York City. You have seen him on Squawk Box back in the day, CNBC. He is a 4-time entrepreneur, tech founder, and he is my new friend, the one, the only Jon with no H, Brod. Jon
with no A, Brod with.
H and no A.
That's right. That was an awesome. Thank you for that intro. I wish. Yeah, I'm done. It's all downhill from here.
Hey, mic drop.
Yeah,
mic
exactly.
drop moment. Here we are, Hard Rock Hotel, Universal Orlando, at what I think is one of the coolest mortgage conferences in the industry. Like, there may be some that are just as good in terms of the content, but there's not one cooler.
I would agree.
Looking at the speaker lineup, and I'm not just saying that because I'm on it.
I was going to say, present company.
I'm not just saying it. Look,
Okay.
I'm the novice. I'm the hack. They give me 30 minutes. Okay, they kind of like appease me.
I understand.
But yeah, there's some killers up there, right? There's some really good who's. And there's also some people that are maybe flying under the radar, but the mortgage industry needs to be following them. And if you're not in Orlando, well, you're missing out. Maybe next year.
That's right.
Maybe next year. But I'm excited that you and I got connected, because you are a runner. I am a runner.
Yes.
Yes. You're a dad.
You're a faster runner.
Oh, I don't know about that.
Okay.
No.
Anyway, okay. I'm a dad. You're a dad. It's a 17-year-old.
I'm a dad. You're a dad. We both have 17-year-olds.
Daughter. 17-year-old.
My 17-year-old's a daughter. Yeah, okay. My son's the older one. My daughter's a 17-year-old.
Okay, my son is 15. So
yes.
We're in the zip code. We're in the same ballpark.
You are a founder, tech innovator, and I look for companies like yours to like invest in.
That's right.
Yes, and then really cool, you had this above me. You know some cool ass people.
I do. Guilty as charged.
Yes,
I know some cool ass people.
And someone once told you look like Matthew McConaughey.
I mean, that was not intended to be for on air.
Okay.
Yeah. Let's.
Okay.
John, can we cut that?
No, we're not going to edit that.
No, we're not.
But Jon is the coolest person I know. So Jon Coleman's the coolest person I know.
I was going to say, you're not talking about me.
You know some cool people.
I do know cool people.
And we're going to jump into today's episode because it's a hot topic.
Yeah.
Like literally, we have a brand new administration. Here we are in 2025. Yeah. New administration. Not only are they out there firing everybody, but look, I'm not here to debate that, discuss that. I don't know enough about it. But they are also, those that aren't being fired are basically being told, if you like your job, you need to plan on work from work. And then because my reticular activator was turned on, I see an article pop up, or maybe because the creepy, weird people over at Meta saw that I was watching something else about, this happening. And all of a sudden in my newsfeed, Dell Technologies, right? Dell Computers, Michael Dell is mandating that all of their employees come back to the office. And you're someone who has some knowledge and some like depth of experience, but also someone who has a pretty badass technology that if you're not looking to do work from work and you want to do hybrid or more work from home, maybe the answer to what you're looking for isn't more Zoom and more Teams. Right. It may be more Roam. And that's what we want to talk about.
Yeah.
So I want the audience to get to know you.
Yeah.
I want you to expound upon what is the deal with work from home, hybrid? Yeah. Where do you think American businesses get it right? Where do you think they get it wrong? And where do you think they're just maybe uninformed?
Yeah.
And then towards the end, maybe tease us a little bit with what you're doing over at Roam and like why I sent Mark Holmes from my team to meet with your team, because I've already decided, look, I run a coaching company.
Yep.
And not only do we have employees, but we also have hundreds of students And maybe Zoom and Teams isn't the way to go. Maybe the way to go is Roam. And there's other people who probably would feel similar. So I'm going to want to tease that towards the end, give a quick shout out, pimp out the product a little bit, even though I'm not an investor.
I'll do my best.
Even though I'm not
By
an
the way,
investor.
Mark has already signed up for the free trial.
Has he? Of course he has.
Yeah.
He's my quant.
He's like, I'm sold.
He is my organizational psychology quant. I told you he would love it.
I know, but we have to save the pimping for later.
We'll pimp later.
Okay, yeah.
Okay. You do have a voice for TV and radio.
I have a face for radio.
Okay.
That's what I've heard.
Well, we put you up on YouTube.
Okay,
which means now Instagram.
Okay, so
it probably means Facebook. We're gonna chop this up and turn it into reels.
Okay.
And you don't have.
All right, this better be good. All right,
that's on you to be good.
All right, so let's
jump into it.
Where would you like to start?
Well, let me give a quick backdrop. This is your fourth company that you have founded.
Yep.
So the three other companies, were they all smooth? Not smooth. How about successful exits?
They were all successful exits.
Yes, nothing's ever smooth. So for those that don't know, like when you are a founder, most times you're looking to be acquired. You're looking to sell at some point.
Right. Or go public or
correct. Yeah, there's some exit event.
Correct.
It's your payday. Right? It's your payday.
Yes.
Because most founders, the enjoyment is actually in the innovation of the idea and then the turning the idea into an actual product or service and then testing it to see if the market likes it. And based on what the market likes, making your tweaks and adjustments so the market wants more of it.
Yep.
Then once you've done that, you start getting bored and you're like, well, this is no longer fun. So let me go ahead and exit, get a cash windfall if done properly, and then
do it all again.
Do it all again.
Yes. That's why I'm a 4-time founder.
That's why you're a 4-time.
I don't know what else to do with myself.
But a successful exit is one in which that you're able to make money for you and your investors. Correct. So it's rare to find someone who's done it once, let alone someone who's done it for 3 different times. Yeah. Just out of curiosity, because I'd love to interview successful entrepreneurs. What were those 3, and what's 2 things that you learned by founding the companies, growing the companies, and ultimately selling them that our audience could benefit from? Kind of like the shit they don't teach us in school.
Yeah.
What's something that you learned that you can pass along? But first, before you teach us what you learned, tell me about those companies. What was company number 1?
Company number 1 was the one that's too hard to explain in 25 minutes.
Okay.
But it started as something called i1.com, which was a portal that has a sweepstakes overlay, and then we pivoted into a toolbar distribution product. We would allow consumers to change the cursor on their computer or their screensavers or insert smileys into IMs and emails. And you would access that through a client that was embedded to a toolbar on your browser.
Dude, what was your background prior to all of this?
No. I know.
You lost me at personalized my
that's
cursor?
That's what I said. Yeah, okay. And we ended up, that was a great exit. We sold it. That was way back in the day. We sold it to Ask Jeeves. Ask Jeeves sold to IAC. It was a very...
like back in the day, like .com? Like... 01 time frame?
This was 04.
Okay.
Yeah.
Cool. So post.com burst.
Yes.
Okay.
We went through the gold rush and the bust and sort of came out the other side.
Very cool. So I did that in the mortgage industry.
There you go.
Yeah. Jumped in 04, survived the bust of 08.
Yep.
Rebuilt. Yep. Some would say back better. Right. 9 and 10, and then went on a hell of a 10-year run after that.
All right. So that was one.
That was one.
Number 2 was
real quick.
Yeah.
I could have personalized my cursor.
Yeah, you could turn it into like a gorilla or turn it into.
I want a middle finger.
Middle finger would work for you.
No way.
Yeah.
All right. Well, I missed out on that. Does that still exist? Can I still do that?
So IAC bought it. It ended up becoming the billion-dollar MindSpark business of IAC. It has since morphed and changed into other things.
Okay.
But and the way it was sort of interesting in that there would be a toolbar in your browser, and then we would monetize through search in the toolbar. So it was free to the consumer, but we would monetize through search. It was, and I won't use more big words about arbitrage and things like that. But
I do love arbitrage. Personally, as an investor, yes.
It's like it's like bringing the cash right. It's just buy low, sell high, make lots of margin. So that was a great cash flow.
What was your background?
I am a liberal arts guy. I know it's terrible. I go back to college.
Liberal arts because you went to Harvard and it's a liberal arts school.
Well, I went to Bowdoin in Maine, small liberal arts college. I studied English and history, political science. I wish I had taken computer science. I just think it's funny. When I was growing up, it was sort of get your law degree, and because that's you can always use that, and that always and it teaches you how to think. I sort of think about that in computer science. It really teaches you how to think, and you can sort of apply it to any industry. But we digress. That
Yes.
was that
Okay,
was number
that
one.
was company number one.
Okay,
Company number two?
Number two was Patch. Patch was a hyper-local news and information platform. We had patches in various communities across the country. Think about sort of disrupting community newspapers on a platform level. And we sold that to AOL in 2009.
Always by yourself or with partners?
Always with partners.
Always with partners.
Yeah.
Was Patch your idea or someone else's idea that you could help come in and execute and scale?
The latter.
The latter.
Yeah.
Yeah. So someone else had the idea.
Yep.
And then you're like, wait a minute, but I know how to grow and scale this. That's a great idea.
Exactly.
And then you combine forces, strengths upon strengths.
Yes.
And then go.
Here
Cool.
we go. Yeah.
Yep. And you all sold that to who?
AOL.
AOL.
Yep.
Back when AOL was a thing.
Back when it was an interesting time at AOL. They were spinning out of Time Warner as a standalone public company. So I was part of that executive team that spun out, and we ended up buying TechCrunch and buying Huffington Post and doing all kinds of fun things.
No way.
Yeah. So
HuffPost. That's so cool. You got to be a part of the acquisition? Like
not only acquisition, for a hot minute, I was like the publisher of the Huffington Post media group within AOL, working with Ariana on the editorial side. There's so much we could talk about, but we haven't even talked about.
I always joke.
Michael Dell and
we're going to get there. We're going to get there.
We're going to get there.
There's a publication in the mortgage and housing industry called Housing Wire.
Yes.
So, yep. So I always joke with Clayton Collins, who owns Housing Wire, that I'm waiting for the day for him to come write me a big fat check where he can buy the Loan Officer podcast. He can own everything that TLOP brings to the mortgage industry. He can own it.
When this episode blows up, then Clayton gets wind of that.
Yes.
You owe me 10%.
I can have my exit.
That's right.
Okay, very cool.
All right. So that was two.
You sold Patch and you sold it to AOL, which in the mortgage industry, you might not know this, but if you're applying for a home loan today in 2025 and your email address is at AOL.com, we, behind the scenes, once we actually close our laptops and get done laughing, we actually say, hey, heads up, like warning, this person has an at AOL. It may be someone who's not too tech savvy.
Yeah.
Yeah.
But that tracks for me.
Yeah. That was a hell of a get for you. That was, and then your third company?
Third company was, of course, a confidential messaging application called Confide.
That's right.
Yes.
So, it's kind of like Snapchat and WhatsApp for business professionals.
That was it.
Nailed it.
Yeah. Yeah. No, don't need to say anything else.
Yeah. And who bought you out of that?
We sold that to ISC, to Barry Diller's company. What was that? 2020.
Nice. How's Barry doing these days?
Great. He's sort of back as the interim CEO, as I understand it.
Yeah. Very cool.
He's awesome.
Tell him I said hi. It's been a while, like 46 years, but tell him I said hi.
All right, you know cool people.
Yeah, no. All right, so let's get it. So that's a little bit of a background, right? And I like that because like this show can't suck, right? And for this show not to suck, we have to make it human.
Yeah.
And it starts with people. People do business with people. We stop there. So let's get to know the people. Like we're getting to know Jon, the person. So now we can talk about Jon, the professional, but really you're a subject matter expert because you've built a product in order to solve a pain, which meant before you built the product, you had to recognize the pain and do some research. And that research is probably going to lead you to being able to be a source of information for all of us so we can better understand work from home, work from work, hybrid, why some companies are anti work from home, and how some companies are just uninformed that there could be a better way if they just recognized the better way and embraced it.
Yep.
One last question before we jump into that. How did you get on Squawk Box and how could I get on Squawk Box? Don't they need a mortgage professional?
They may very well. So we need to introduce you to the right producers and on-air talent to get you and so that when there is breaking news about the mortgage industry, they can
yes.
Or
I am
when
waiting.
you sell this to Clayton, when you sell this podcast to Clayton, maybe they'll have you on because it's big news in the mortgage industry.
Clayton's lead analyst, Logan Motoshami, who's been on the show.
Okay.
Logan gets to get on those on one of those, he's and he gets to do it from his home. I could do it from my studio. I could at least have lights and cameras and it could be a little bit more of a professional.
Let's you and I work on that.
Let's work on that. I'm waiting to get discovered. This is our 5th year, right? 5th year podcasting. So I'm waiting for someone to be like, oh, these guys are pretty good. Let's go ahead and put some juice behind them.
Yeah.
It's kind of like Dave Ramsey, Joe Rogan have a baby. They get us. I would love to do this 2 hours a day, 5 days a week.
Yep.
Yeah, screw the mortgage industry. Let's like reshape all of middle America, teaching them the shit they didn't teach us in school. Yeah, which
Amen.
I probably couldn't say shit on
I was wondering about
Squawk
that.
Box.
Yeah.
Yeah, they need to step up their game. Right? At the end of the day, we're getting rid of NPR. We're getting rid of PBS. Like, this is cable. This is cable.
All right.
I can say shit.
Okay.
Yes, I told them that.
Right. You made,
You tell Mark Burnett that, or whoever produces Squawk Box. I said, I don't know.
Reality TV? God.
Whatever.
Okay.
Whatever. All right, now we can jump into why we showed up. Except for one more cool fact. People don't know. It's like John and I met today. You'd act like we've known each other for years.
Kindred spirits.
We are.
Yes.
Like one of the new people that I love to follow and look up to, Jesse Itzler.
Yes.
Like,
well, I know is a strong word. Yes.
Okay. You're not part of his running club.
No.
Okay.
No.
You don't.
But
I'm
a massive fan of Jesse.
You don't go to his house and run the hill.
I don't. With
You've
his
not been invited.
Incredibly successful wife and his beautiful children. Yeah.
Yeah. So like, I don't know what rock I've been living under, but like I knew the name, but I didn't know him. Oh. And then someone said, "Oh, you should listen to." It was Living with Monks.
Yeah.
So I listened to it. This is my year of audiobooks. I became a reader 5 years ago. I became a listener of books this year. And now I'm trying to read one book a month and listen to one book a month. Like, I don't have big, lofty goals, just realistic ones that I can achieve.
Yeah.
So the first book I ever listened to was Living with Monks. Then I was like, well, shit, let me go listen to Living with Seals. Then I was like, well, let me follow this guy. And I'm like, oh my gosh, you talk about kindred spirits. I'm like, he's my kindred spirit. And I know of Sarah Blakely, right? I know of Spanx.
Yeah.
And in fact, a friend of mine, his account is Spanx. He's like a 401k guy. And so through him, I've kind of been somewhat introduced, but now I'm falling in love with her. And all of a sudden, I'm like, do I just have a crush on the Itzler family?
It's a power family, power couple. They're great humans.
Why don't they try to take over the United States of America? Why do other billionaires figure it's their job to do it? Like, let's let Sarah and Jesse do it. So anyhow.
Yes.
Okay. So you can't get Jesse on the show then?
I do not believe I can get Jesse on the show. I can try.
Damn it, John.
Sorry.
All right.
So should I leave now?
Yeah, are we done? I thought this was going to be my end of both, like, Squawk Box and Jesse Itzler.
We have things to work on.
All right.
Okay.
Let's get into the show.
Yeah.
There's some people right now MFing us.
They
are truly MFing us.
Yeah, I don't blame them at this point. Yeah.
All right. Let's talk about this.
Yeah.
Work from home.
Yeah.
What's the deal? Why is Michael Dell doing what Michael Dell's doing?
Yeah.
What's the data telling us?
Yeah. So return to office, RTO, is having a moment.
Yes.
Right? You're not the only one seeing the headlines because you happen to, like, it is all over the place. And I think it's important to understand incentives, right? So who are these people that are requesting return to office? Many of them are large banks. Many of them wanted to do layoffs, and this could be a way to circumvent layoffs, right? Everybody has to come back to the office. 10 to 15, 20% people leave, and you don't have to have a layoff. You don't have to pay severance.
Reduction in force.
A reduction in force.
Yeah,
right.
so reduction in force by, like, volunteer.
Correct.
Yeah. Okay.
So again, you have to be understanding of the incentives. Another incentive, a lot of these guys are banks, and a lot of them own massive commercial real estate portfolios. Yes. So they have every incentive to not only be back in the office themselves, but to encourage others and to make news about being back in the office and how wonderful and important that is.
Okay, that makes common sense.
That makes common. Now let's talk about the data.
Yeah, because the productivity data. That's what I want to get into.
Well, let's be even a higher level data. So, you might think, oh my gosh, all of America is returning to office. Here's the data. 68% of U.S. companies have a flexible work policy. 7 in 10. Okay, so despite all these headlines.
Was this pre-COVID or post-COVID?
This is post-COVID.
Okay.
This is Q4 data.
What's the difference between pre-COVID and post-COVID? Do you know?
So I know work from home 5x'd pre to post, and has remained very steady post-COVID. Okay. Despite, again, all these
so this
RTOs.
is a newer phenomenon post-COVID. This isn't like one of those, we were already 20% hybrid pre-COVID, and now we're 70%.
It is. COVID was absolutely an accelerant.
Okay.
Here's another data point that I think is really interesting. 91% of companies that were founded in the last 10 years have a flexible work policy. So it is a much more modern approach. If you're newer, you generally sort of were born with it, and it didn't involve a massive shift.
So this is like AI. We're not putting it back in the box.
We are not putting it back in the box.
Okay. So then is your professional assessment what I'm reading in the news, whether it's the federal government, whether it's Michael Dell, whether it's Jamie Dimon or Elon Musk, there's potentially, you don't know this for a fact because you don't hang out with those guys.
I don't.
But your professional assessment as someone who knows a thing or two about running businesses, this is more of a short-term play because there's ulterior motives?
I think that's certainly part of the story. Look, I also think it's different strokes for different folks, right? So some people are going to want everybody back in the office. I think that tends to be a stodgier, more sort of old line approach. These tend to be older CEOs. They also tend to be white male CEOs. So, you sort of revert back to the mean and what you know.
Back in my day.
Right, exactly. Yeah. So I don't think it's a particularly modern approach. But if it works for some people, great, right? And I think there's going to be a contingent that is remote, and I think there's going to be a contingent that is hybrid, and all of that is perfectly well and good. We should do what works for us and our employees. Look, I do think there are massive advantages to distributed work. I think the notion of having to only be able to hire. Right, the world is getting very, very competitive, and this idea that I'm only going to hire within a very strict geography based on where these buildings are and these cities are, like, that's crazy, right? That is a massive disadvantage, competitive disadvantage, and so I think that's something that we all have to keep in mind as we think about what work policy we want for our company.
Yeah, when I think of work from home, I think of hybrid. I think of myself. I'm white and male. I can't change that. No. And I was more resistant to work from home because it wasn't what I knew and it wasn't what I preferred. Right? I prefer going to the office. I prefer getting up, putting on my uniform, and going to work.
Yep.
There's a psychology behind that. However, I have learned that I can't manage people like me. I need to manage people like them.
Yep.
I've also learned that once I started working from home, I rather like it. Not every day, though.
I was going to say,
not every day, but I rather like having 2 days a week where it's like, I got to get shit done. Yeah. And I'm going to lock myself in this office at 7:45 a.m.
Yep.
I'm not leaving but to pee, grab lunch, and work till 5 and leave me alone.
I like flexibility. Right?
Yes.
It not only allows you to hire the best talent anywhere, but it also allows for different scenarios. And maybe I live in New York City in a very small apartment with a roommate, and I don't want to work from there. Great. Or maybe I want to on Mondays and Fridays, and I want to, fabulous. And I think, and here's the other crazy thing. Like, if you think back, every successful company at some point or another becomes distributed. Right? You start in a building and then you grow. And then all of a sudden you've got two, if you're maybe in a mortgage company, you've got 2 branches or 5 branches. And then you've got a couple of loan officers working from their homes. And then you've got different industries. Maybe there's a warehouse, maybe there's a call center. Like, you just end up distributed.
Yes.
And so this idea of everybody's got to be back in the office and everybody, like, we never were. And so I think it's all sort of HR-y sort of noise.
Well, one of my bigger issues is there's a human component. Like, I feed off of other people's energy. Yeah. I get some of my best ideas during times when I wasn't planned to get an idea.
Right.
Because I walked into a conversation, I was pulled into a conversation, or sometimes someone just said, hey, we're grabbing a bite to eat. And even though I brought my lunch that day, I was like, you know what? I think I would like to go get a bite to eat with these people. I can eat that tuna sandwich tomorrow.
Yep.
And then the conversations that I had or the people I met,
right.
I was like, yeah, this was worth me being in an office.
Collisions.
Yes.
These almost serendipitous collisions. Very, very,
I love the serendipitous collisions.
You like that? Yeah.
I love that movie, Serendipity.
Yeah.
God, I'm dating myself on that one, though. But then we dial it back, and I start thinking of as a business operator. Look, if I go work from home, then all of a sudden, you name that employee, processor in Topeka, Kansas, way cheaper than a processor in New York City.
Yep.
And if I'm running a business based on a P&L, which just about everyone, including nonprofits, do that, then I need to take that into consideration. That said, this is always my fair warning to all of the associates out there, all of the team members. Please know when you are pushing hard against your employer to work from home, you are now opening up the competition for your job to the entire world, including the Philippines and India and so many other places.
But you made a great point about, so salaries is one thing, right? Hiring somebody in New York versus Kansas. The number 1, 2, or 3 line item of almost any business is real estate. Yes. And so if you can hire more cheaply or just hire the best talent most efficiently, and you can reduce your 1, 2, or 3 line item, expense item, I mean, that's terrific from a bottom line standpoint.
Okay,
right?
So then ready, Mr. Roam? Mr. John with no H.
Why do I feel like
Mr. Brod with no A?
Why do I feel like the hardball's
Jon Brod?
Yes.
No, let's get into this.
Let's get into it.
So then how do we work from home without being so disconnected and isolated? What does that look like?
So that is why we started Roam.
That was your reason.
That was the reason.
Because you looked at, there's solutions out there. Why do I need Roam when I already have Zoom and I already have Teams?
Right. So let's think about what a typical day is in a distributed workforce. I wake up, I open up my calendar, and I see an entire day of pre-scheduled 30 and 60 minute. That is my entire day.
Facts.
Right?
Yes.
Right. Facts. That is not a good way to run a business. That's not a secret. By the way, it's also a terrible way to build a culture. Also, everything slows down, okay, in a distributed workforce, right? So the stuff that you and I used to knock out in 5 minutes right now because we're right here together, right? We end up scheduling for a week from now with 3 other people for 30 minutes, even though there's only 7 minutes of content, right? And so everything slows down. The culture's terrible. You're miserable. You're back to back. And the problem is the technology. Right. So like we know how to run businesses. We know how to build good culture. But the technology is forcing us to change how we know how to work and like to work, it's forcing us to change our workflow to meet the needs of the technology. We think that is fundamentally backwards. And it's not anybody's fault. This technology was never intended to replace offices. It was intended to supplement offices. But then all of a sudden we found ourselves in a distributed world. We grabbed what was available to us, but it's not good.
So I think that's what's key to know. This is what's key for people like me to know. Zoom and Teams were created pre-COVID.
Yep.
Pre-COVID.
Yeah.
So they weren't.
Add Slack in there too, for that matter.
Oh, if we want to talk about Slack, I love the Slack story. I actually will use the Slack story in my presentation more than likely tomorrow. Because I talk about technology in general, like for mortgage industry, I'm like, be a fast follower, do not be an innovator. Be an early adapter, do not be an innovator. Innovation is freaking expensive and risky. Fast followers and early adopters, and then also understand at the end of the day, the consumer decides. And I'll use the Slack analogy because Slack was made for internal use only. Study their story. Whatever company it was designed for, that company was no good, meaning it folded. But whoever acquired them loved Slack, and Slack was the intellectual property that was worth billions. It wasn't whatever it was they were trying to do. I think it was like a video game or something. So yes, so Slack, Zoom, and Teams all made to accentuate the business world pre-COVID.
Right.
Yet we use it.
But
we use it in a post-COVID world.
Right. Not purpose-built for distributed work.
Yes.
And I think that's the opportunity, because when you have to contort yourself and your business to meet the needs of the technology, you end up being less productive, you end up with a worse culture, and you end up being less efficient.
So then what are y'all doing over at Roam to make that different?
Right. So Roam is a virtual headquarters. So we take your entire distributed team, right, remote and hybrid, we bring everybody together in a shared real-time sort of bird's eye interface so that you can see who's in the office, right? Who's working, who's not in the office, who's meeting together, whose door is locked. You can go knock on doors, drop in on people spontaneously. It's really intended to create the feeling of everybody being in the same physical room together, with the visibility of that, the accessibility of that, the spontaneity of that. But they could be anywhere in the world. And so we're trying, it heretofore has been you have to make a choice. Do I want the flexibility of work, or of distributed work, or do I want the productivity of? And we're trying to get rid of that false equivalency, false choice.
You can have your cake and eat it too.
You can have the best of both worlds.
Best of both worlds.
Exactly.
Yes, you can have your cake and eat it too. I got to see a demo.
Yeah.
And anyone who tunes in the show, you know I'm not a tech person. Like I don't even joke about it, but like I'm so not a tech person that my team will not give me editing access to our Google Docs because they're afraid I'll screw something up. Right? Like I'm the guy that I needed my son, whether he was 8 or 18, to actually install my monitors for me. You're like, but I love technology. I love my team using technology, and I want to have nothing but the best technology at my disposal. I just have no interest in actually like setting it all up.
Right.
And you demoed yours. And I'm like, this is freaking awesome. Yeah. Like it reminded me a little bit of like Sims, the video game.
Yeah, totally.
Right. But it was, I mean, obviously, that the graphics on Sims is nothing like the graphics on what you're providing at Roam. And it was like in real life, I could go knock on my buddy's door. He could let me in and we could have a quick conversation.
Yeah.
I could stand on stage and you could fill that room with 300 people in the audience and they could clap me. They could boo me.
Right.
Right. Like,
and importantly, they can be anywhere in the world.
They can be anyone, anywhere in the world, yet it feels like they're next door to me. Out of curiosity.
Yeah.
Any thoughts of VR goggles?
Sure.
And letting me actually roam through the halls and walk in on my buddy and have that conversation?
Yeah, we're very bullish on AR and VR. We think it's going to take time, right?
Okay.
Everything's expensive and they're heavy, and if you wear them for more than an hour or two, you get nauseous. And so it's not there yet.
Okay.
But the way we have built Roam is that it could easily be ported to AR and VR if and when that actually becomes more commonplace.
And what I love about the product, and I'm going to have you tell people where to go find out more about it, but it's like we will be signing up on it through TLOP. Like the Loan Officer podcast will be becoming, because it's affordable, because you're not locking me into a contract. Right? Like, and it's cool as shit, and it's better than Zoom, and it's better than Teams.
Right.
And for what we do, running a coaching company, it's just a natural evolution for us to be at the cutting edge. But what is it? It's like $10 a month per user?
Yeah. So $10.50 per active user.
Oh, active user. So like
per month.
Yeah. So if I had 50 people in my organization, but 20 of them don't have any type of interaction with others, we don't pay for them.
On that given month.
That given month, yeah.
And we only go month to month. We don't try to lock you into annual. It's just a reasonable business. We're trying to be customer friendly, right? So it's a month-long free trial. Make sure you like it. We then only go month to month. We don't try to lock you into things, and we only charge for active users, and we charge $10.50. And for that, you get an all-in-one solution. It's audio, it's video, it's AI meeting summarization. It's
I forgot about that.
I know, we have to talk about that.
Yeah, it's having your private assistant that you don't pay for because she's AI,
right?
And be able to at her and.
I used to just spend all the meetings. I would talk to you and I'd frantically take notes, and I'd only be half focused on you. But now the AI meeting summary can do that. I can be present and really focus on you, which is amazing. We have a full chat platform that is as robust as Slack, and so Calendly competitors. So these are 5 businesses, each of which costs more than $10 a month, and you get all of them for Roam. And here's why we're at MortgageCon, right? Why are we?
Yes.
What are we doing here? So we launched to the public about a little over a year ago, and it was all inbound, right? We didn't do any outbound. It was some social, and all inbound, and we got a disproportionate number of mortgage companies. And it's interesting. None of the co-founders are in the mortgage business, but when
that's how we all get into the mortgage industry. Like we don't seek it,
right?
Some do. You know what? Because of this podcast, we have thousands that have sought the mortgage industry because they found the podcast.
Right.
But that's outliers. Most of us, just like your company, it sucks you in.
And so we're like, what's going? And then we're like, of course. Right? We've got loan officers all over the place, and particularly as you're scaling your mortgage company, you need to, into different states and all of that. And it doesn't feel cohesive, and you want to bring everybody together and create a culture and be really productive, right? You want the originators talking to the processors and the AEs, and they can knock on each other's doors, and the real estate partners, and everybody can kind of come together in this virtual world, again, regardless of where they are in the physical world, and get things done. I was going to get shit done.
Yes.
I can say shit.
You can say shit here.
Get shit done fast, right?
I actually have a shirt that says "Get Shit Done." It's
GSD.
Friends of ours, friend of the show. The company's called Truve, and Truve is bringing a lot of data verification to the industry at a very affordable and accurate rate compared to its competition.
Yeah.
And Truve, shout out to Richard, gave me a shirt that says "Get Shit Done." So I like to rock that one in when I'm at the gym.
Just finish the
yes.
pimping. Average meeting time in Roam. You ready? It's not 40 minutes, right? The 30 minutes and the hour. It's 8 minutes long. 8 minutes average meeting time.
Out of curiosity, if I have my Roam account,
Yeah.
and there's a realtor at Keller Williams, and they have a Roam account, I can give them access to like my office,
Yes.
to where they can come knock on my assistant's door.
You can chat with them, right? And you can also give them a guest badge to allow them access into your Roam when you're there.
That's super cool.
Yeah.
If people want to find more about Roam, is it Roam.com? What is it?
No, it's ro.am.
Oh,
yes.
Fancy.
Well,
ro.am.
Well, this is a teaching moment, right? Roam.com, we tried to buy. It was like somebody wanted 8 figures for it or something. .am is Armenia. That's the .am, right?
Okay.
And so it was about $37.50 to get ro.am. We also happen to think it's pretty fucking cool. So,
I think it's pretty fucking cool.
.am.
I think it's pretty. Now, I teased this, but you haven't given it to us yet.
Yeah.
Okay, this show is truly about the shit they didn't teach us in school.
Okay.
I know we lean hard into mortgage, but honestly, the show is everything I learned because I became a mortgage loan originator, right? Okay. That's what it is. It's 20 years of just my experiences, the shit that they didn't teach me in school or that my parents weren't talking about at the dinner table. As a founder, as an entrepreneur, someone who's exited successfully multiple times and has another great product, what are 2 life lessons, business lessons that weren't taught to you in school, but you have learned through the School of Hard Knocks?
Number 1, it's all about the people.
Okay.
It's all about the people. I don't care how good your idea is. I don't care how good you are. It is the people that you surround yourself with, that you're working with. That is going to be the biggest predictor of the success or failure of the company. That's number 1. Number 2 is be eternally restless.
Be eternally restless.
It's never good enough. It's never fast enough. I'm always nervous. I'm always slightly paranoid.
Yes. And productive. We call it productive paranoia for you.
Thank you.
Yeah, it's a new term.
Double P.
Yeah, it's a new term.
P squared.
Yeah.
So that is I think that is one of the superpowers of the entrepreneur. It's just I don't care. People can tell me it's great. You can look at it and say, "Oh, how terrific!" And all I'm restless. I'm uncomfortable. I want to do better, faster, stronger. And I think that's.
I love that. Like that coincides with my childlike curiosity. Never lose your childlike curiosity.
Yeah.
On yours, it was never. You just said it to me.
Yeah, restless. Eternally restless.
Eternally restless.
Yes.
Yeah, I'm gonna have to say that 3 times over so I can swipe it, adapt it, and start deploying
Sounds like a soap opera or something.
Yeah, eternally restless.
The young and the eternally restless.
John, do this for me. If people want to connect with you, are you approachable?
What do you think? Yeah.
Yes. Well,
okay.
Where?
Here we go.
Where could I find?
Let me just
Jon Brod?
Let me give you my email address.
Yes.
Jon Jon.
Yes. No H.
At ro.am.
JON at ro.am.
It's super tight and easy.
Are you on LinkedIn?
I'm on LinkedIn.
Instagram?
I'm on Instagram.
TikTok?
I am horrific. No, don't look at me on TikTok. But X, formerly known as Twitter, I'm active on that.
Okay.
And then I'm trying to think.
I can't imagine there's that many Jon Brods spelled that way.
Yeah.
No, that's good. No, check him out.
Yeah.
Y'all connect with John. Go look for your futuristic solution to work from home, hybrid, doing it what I would deem the modern way, the next gen way.
And of course, I have to give a huge shout out to Joe and John at Empire Fi. Those guys are just killing it.
Dude, the Motos.
Yes,
John and
because
Joe
I don't know how to
Moto.
pronounce or spell their last name. I'm just going to go.
It's Moto Widlack.
Okay, there you
And
go.
Empire Financial.
Empire Financial.
Yes.
Roam customers. They putting on Mortgage Con. They've been incredible partners and friends. They're the best.
All right, perfect. Shout out to the Motos, John and Joe. Shout out to Empire Financial. He's John. I'm Dustin Owen. And like I said, that's all the time we have for you today. See ya.